Why do I need my own LLC and a separate LLC for every single property? So here's the deal, guys. You've got to realize that every time you're doing a fix and flip, a fix and hold, a rental property, you have exposure. And exposure meaning you can get sued, you can get something for discrimination for some type of a rental thing that you've done. There's all kinds of things that can happen that create risk. Okay, you've all seen the person at McDonald's lawsuit for hot coffee. So McDonald's $2.7 million in punitive damage, $200,000 in compensatory damages for hot coffee. Like, are you kidding me? Like, coffee's supposed to be hot. Or McDonald's, what was the last one that happened? It was a chicken nugget. So a jury awarded $800,000 to the 7-year-old girl because she got burned when she got her Happy Meal when she was 4 years old. Here's the thing, guys. Like, I want my nuggets hot. So there's a lot of crazy things that happen out there, and there's a lot of attorneys that I would call unscrupulous that are willing to go after things to find just this little thin line. Or what they try and do is make it so miserable that a company's like, fine, we'll just pay you out some money. Those things happen all the time. And they also happen in real estate. So when you're doing that house, there's a lot of people that are coming through that house, okay? So you've got all your contractors, and you've got the subcontractors, and you've got the delivery guys, and you've got the guy that's doing the grass. You've got all these people, the person that does the blinds. Like, you're having people in and out of this house all the time, okay? Then when you list the property, you're gonna have agents in and out of the property and buyers in and out of the property. So what happens if somebody slips and falls and breaks their leg on this property? Well, you're gonna get sued. So we try and mitigate that in a couple of different ways. One way that we do that is insurance. We have insurance, right? So we have property insurance for those types of things. However, like you will see, insurance has little asterisks of things. Oh, by the way, we don't cover this, we don't cover this, we don't cover this. And they give you 100 pages that you're supposed to read that's all in legalese that says what's not covered and what is covered. And everybody just says, well, I hope it all works out. Because it's so complicated to know where those things are. So let's say that something happens, the insurance doesn't cover it. Well, guess what? Lots of people will say, hey, this property is owned by an investor. This investor's got a whole bunch of money. So what we want to do is whether we have a bunch of money or not, what we want to do is we want to limit the risk to just this single property. And the way that we do that is we create an LLC called a special purpose LLC that's just for this property. So basically, what I don't want to have happen is I do this and heaven forbid some catastrophe happens. I'll give you another example. One of my friends had a kid that was hitting icicles, and one came and poked his eye out, which is tragic. There's no question that it's tragic. And so they were in court and getting sued because of that, and they wanted damages because of his eye. Well, here's the interesting thing. How can you get an icicle in your eye unless you're fooling around trying to hit him, right? If I'm walking, it hits me in the head or whatever the case is. So the reality is the kid was messing around, and the icicle he hit, and it came down right into his eye because he was messing around with that, right? That's tragic, and that's not what we want to see happen to anybody. But what we want to make sure as real estate investors that we're not wrongfully responsible for the actions of a child that shouldn't have been doing that and frankly knew better, that could come and take financial security away from us. Yes, we'll have insurance, we'll do the things right. But what happens is when we have that LLC, everything that happens on this property is limited to this one LLC. It doesn't affect any other properties I may own. And you would say, well, I don't own any other investment properties. Well, it could affect your primary house, and it also could affect your job or the income that you're bringing in from that. So what we're doing is we're taking all the risk related to this one project and we're putting it in this. So if something, heaven forbid, did happen, it's limited to just what I have in here and not any other assets or income or houses or primary house that I may have. This is invaluable, guys. I mean, this is the kind of thing where it's like, hey, it's never a problem until it's a problem. And when it's a problem, it's a major problem. And so this is kind of like buying insurance, right? We're putting this together in the unlikely event that something like this can happen. Now, it's not just during the term of ownership, right? So after you sell this property, the other thing that can happen is you could have a buyer that buys it. And I've seen this happen on property as well. Somebody bought the property. They bought a property from a builder, brand new house, completely built. They got into the house and they started seeing mold. So they moved out of the house in the middle of the night and they sued the builder for mold, okay? And this went to court, this drug out, this whole thing. Well, guess what? What happened was when the builder was doing the sheetrock, there was a pipe that came down that was actually the clean out. Now that clean out's a black pipe, which is where the septic sewer goes through. There's a cap for the cleanup. Well, either got knocked off or somebody didn't put on the cap and then they got sheetrocked over. So what would happen is as flush or as things would come down, a little bit would spray out. A little bit of spray out, and then that got into the sheetrock, and then the sheetrock started to get moldy and it started to create a problem. Well, they had $1 million lawsuit over this. The interesting thing is this was fixed for just a few $1,000s. I think it was less than $10,000 or $15,000. They had $1 million lawsuit over this. This is where I think somebody's trying to take advantage of the system, in my personal opinion, because a $10,000 or $15,000 fix. And the interesting thing on this case was the buyer that bought it wouldn't allow the builder to go in and see what was going on. They're like, nope, we won't let you in our property. And it's like, come on, let us in the property. Well, let's go see what's going on. So they were obviously just going after money and those things, right? So that's what's going on here. So after I sell the property, the new buyer, if something happens or there's mold or those types of things, if something happens, it's limited to just this LLC because I don't have other assets tied to this specific property. So it's limited to this. So what we do is a single purpose LLC. One purpose, LLC good for one thing, and that thing is to make an investment in this property, and we want all the risks and everything put together just into this one thing so it doesn't jeopardize for when we're buying it, during the construction, after the construction, when we sell it, if something happens to somebody, all of that risk is all taken into this one thing. So what does that mean? It means that in a worst case scenario, your liability is only equal to the amount of money you made on this one single deal. So something happens, it's unfortunate, we put it through insurance, maybe they cover some, maybe they don't, maybe it's not covered by insurance, and then there's a lawsuit, and then you're trying to deal with that lawsuit, and it's like, hey, my exposure on this is limited to just what this is. And so whatever money is made from this, so that's what we want to call our worst case scenario. So we're structuring these things. Now, it took 20 plus years to figure this stuff out, guys. And I had to go through a lot of poor experiences to figure it out. And so I'm giving you this knowledge so that you can make sure you don't make some of the same mistakes. So first of all, that's what we do. We create a special purpose entity for each property to protect you, protect your investment. So like we talked about here, this LLC is this liability firewall, right? So it protects everything else you own and everything else you have or your own personal residency or anything else from having to go through that. Also, something to keep in mind is if you have a problem with something else over here, it's not going to affect this property. So let's say that you had another rental property and there was an issue on that. Well, they couldn't come after this property as well because it's a completely different entity. Now, this isn't legal advice, but this is just common knowledge as to how that works out with these different LLCs is trying to limit the liability, which is why they're called limited liability companies. The other thing you may say is, okay, so we've got that. Do I need another LLC? Well, the answer is no, you don't. But what a lot of people like to do to further insulate themselves is to have a parent LLC. So this is the parent LLC. So that I could call this Right Investments LLC. Okay, this is my parent LLC. And then what I'm doing every single time I do a property, I'm doing a new special purpose entity, which is a single purpose LLC. And that is just for this one house, 123 Main. Okay, and that is actually owned by Right. And then I'll come here and I'll have another one for 123, or I'm doing this in the same 456 Jones Street, right? And then I'll have one for 8910 Main. So basically, let's say that this property I'm going to rent, and this property I'm going to flip, and this property I'm going to wholesale, right? So I could be doing different things with all of these. Well, what happens is this LLC actually owns this. But if something happens, it's only related to this LLC, not to the overall parent company. And same with each one of these. And so it gives me maximum protection when we're dealing with something of having a parent LLC with all of these single purpose entities or special purpose entities that hold just the one single property. They're a special purpose entity and they're a single purpose entity. They're only for the one deal is how we arrange these. Now, you don't have to worry about this. Our attorneys set these up, do them right, put that together as part of the closing process because we believe so heavily in these things and how important that it is. The other thing is this just makes things simple, right? So if this is the owner, rather than having to go and open a bank account for each one of these, all the money can flow back into here, into this general bank account because this actually is the owner of this, so those funds can come into here. So it just helps with administrative purposes as well. So in the end, this is a two-tier LLC system. The reason why we have this, it provides the optimal balance of protection, asset protection, tax efficiency, simpler management with real estate investors looking to build a portfolio, whether that's rental, fix and flip, wholesale, or whatever else, land flipping, whatever else you'll be doing. You can do anything under these that is a legitimate business purpose, and they can be different on each one of these properties and still be owned by the individual parent LLC. So these are some things that we recommend that we think are best practices. We can help walk you through all of this, and we're excited to help.